Thank you all for being here, and let me introduce each of you, starting on the left, and I hope I get the names right. First is it Mila Kaufman? Mila Kaufman, who is Superintendent of Insurance for the State of Maine Bureau of Insurance. Then we have Dr. John Kingsdale, who's Executive Director of the Commonwealth Health Insurance Connector Authority. And then we have Karen Politz, with 2 L's, not 3. Your name tag has 3 L's. Karen Politz, who is Research Professor at Georgetown University Health Policy Institute. And then we have Dr. Catherine Baker, who is Professor of Health Economics at the Harvard School of Public Health. And finally, Edmund Heiselmeyer? Heiselmeyer, who is a Senior Research Fellow at the Center for Health Policy Studies with the Heritage Foundation. Thank you all for being here. I know some of you have actually been here since the beginning, which has I'm sure been difficult. But in any case, we'll have statements from each of you, about 5 minutes each, starting with Ms. Kaufman.
Good afternoon, Mr. Chairman. I thank you and the committee for your leadership and willingness to address the healthcare crisis in America. It is both an honor and a privilege to be here before you to testify on this matter. I did submit a written statement, and I ask that the full written statement be admitted as part of the record.
And that will be the case for each of you. We'll enter your full written statement into the record.
Thank you. My name is Mila Kaufman. I'm the Superintendent of Insurance in Maine. My agency serves and protects the public through regulation and oversight of the insurance industry. It is my job to ensure that insurance companies keep their promises. My views about reforms and the private market have also been informed by my experience as a federal regulator and through my research on private health insurance as an associate professor at Georgetown. I believe it would be optimal for us to address the healthcare crisis in America in its entirety and for the federal government to ensure that all Americans have access to affordable, adequate, and secure health coverage. We live in the wealthiest nation in the world, yet we allow 18,000 Americans to die preventable deaths each year on our soil, not overseas, but here. The uninsured problem is estimated to cost our economy as much as $130 billion annually. Maine has been at the forefront of reforms, developing innovative initiatives to help finance medical care. Governor Baldacci has been a leader in establishing meaningful new health coverage options for individuals and small businesses, coverage that actually works for people when they are sick. Today, I will discuss the types of problems I'm not seeing because of the insurance reforms we have in Maine. First, it is important to remember that the private market is not a free market where purchasers have meaningful options. A free market assumes that everyone who wants to buy a product can choose among sellers competing for their business. Insurance companies do not compete to insure sick people. Insurance companies do not compete to insure sick people. An insurance company's success depends on its ability to minimize its risk. This provides incentives to cherry-pick healthy people and limit the number of unhealthy. It creates a private market from which many Americans are shut out. Even minor conditions like an allergy could be the basis for not selling you a policy. Also, in most states, insurers are allowed to charge higher rates for people with medical needs. This includes charging small businesses with sicker workers higher rates than small businesses with healthy workers. Maine is one of 5 states, in addition to New Jersey, Massachusetts, New York, and Vermont, that prohibits discrimination against individuals. We do this through guaranteed issue and adjusted community rating laws. Guarantee issue laws prohibit insurers from turning you down because of your health. Adjusted community rating laws prohibit insurers from charging sicker people higher rates. In addition to allowing people with medical needs to access private coverage, the combination of guaranteed issue and adjusted community rating laws has protected Maine consumers from some of the problems experienced by consumers and small businesses in other states. For example, we do not have rescissions, the problem that Chairman Waxman examined extensively as chairman of the Oversight Committee last year. This is a problem of having your policy retroactively canceled and being responsible for all the claims paid while you had the policy. Rescissions leave people on the hook for their medical bills and uninsurable, completely shut out of the private market. In Maine, a consumer does not fear losing his or her insurance because he or she may have completed the application for insurance incorrectly by mistake. In other states, consumers reported having their policies canceled retroactively for forgetting to report seeing a marriage counselor years before. In Maine, because insurers are not allowed to consider current or past medical needs in the first place when selling or pricing a policy, we have not had a problem with rescissions. We do have a problem, however, with affordability. The healthcare crisis is like a slow disease slowly killing off the middle class. It is a huge burden on employers of all sizes, on workers and families. Health insurance premiums are expensive because medical care is expensive. The private healthcare financing system has not effectively switched its focus and incentives from paying for sick care to promoting wellness. The current system rewards inefficiency. Carriers have not been able to negotiate effectively enough with providers to keep costs contained. Many factors contribute to the price of coverage. That includes the cost of medical care, administrative costs, and profits. Since 2002, our state's largest insurer has declared nearly $152 million in dividends. As far as next steps, there is a strong and appropriate role for federal policymakers. Americans need and demand meaningful health insurance coverage options to access and pay for necessary and, in many cases, life-saving medical care and services. Working together, the federal government and the states, we can address the healthcare crisis facing our nation's employers, workers, and families. I encourage you to build upon the foundation that you established in 1996 through HIPAA, a federal floor of protections, recognizing that states have and should be allowed to create and enforce higher levels of consumer protections as their populations need. In addition to improving and having strong protections, it is equally important to have strong regulators to enforce the law. State regulators have a long history of effectively protecting insurance consumers. I encourage you not to duplicate or replace the existing effective state-based insurance oversight system. Thank you, and I look forward to assisting you as you move forward in addressing the healthcare crisis.
Thank you. Dr. Kinsdale.
Thank you. Thank you, Mr. Chairman, and members of the committee for this opportunity and, more importantly, for tackling this tough subject. I'm Executive Director of the Commonwealth Health Insurance Connector Authority, which is one of the principal agencies of health reform in Massachusetts, and I want to share with you a couple lessons learned. First of all, I would note we do have 97.4% of our residents covered with insurance. Before I heard that characterized in the former panel, I actually thought that was good. It is by far the highest insurance level in the United States, which sadly is below 85% nationally and declining as we speak. 2 years ago, after beginning implementation, we reached the principal goal of Massachusetts Chapter 58 of the Acts of 2006, near universal coverage. As a result, financial barriers to obtaining care have fallen markedly. An Urban Institute survey conducted midway through implementation, and I emphasize midway, found that in Massachusetts, rates of deferring needed care because of financial barriers were between 1/2 and 1/3 of the national average, and I think it's reasonable to assume as enrollment continued to grow, the financial barriers continued to fall. Importantly, Massachusetts has been able to achieve near universal coverage without a surge in medical inflation. In Commonwealth Care, a program run by the Health Connector for lower-income adults without access to employer-sponsored or other public coverages, annual premium increases average under 5%, and that's better than the national experience, in fact, most private experience in Massachusetts. Last week, we actually completed a bidding and plan selection for the next fiscal year, starting this July, which has produced the following rather extraordinary results. Choice of health plans and access to new primary care physicians will increase both the government spending per enrollee and what our 165,000 enrollees contribute monthly will decrease. And I've been in the insurance business for 35 years, and I don't usually use premium and decrease in the same sentence. The Connector runs actually two distinct programs. So its second program, Commonwealth Choice, unsubsidized enrollees enjoy a broad array of commercial health plans. They can compare 37 private options that we offer, confident that these plans have received the Commonwealth seal of approval for quality and value. On the day we initiated Commonwealth Choice and the individual mandate, July 1, 2007, purchasers of non-group plans experienced a huge gain. Their choice of plans increased suddenly, their average premiums dropped markedly, and shopping for a plan became far easier. The result has been a resuscitation of the non-group market in Massachusetts. Prior to reform, non-group enrollment had been falling and premiums rising. A year later, the number of Massachusetts residents buying insurance directly on their own had doubled, and the premiums for standard coverage in the largest non-group plans had declined by 25%. Although we only offer 37 of the 180 options now available to individuals in Massachusetts, and they're priced the same in the Connector or if purchased outside the Connector, our growth has accounted for 50% of the doubling, 50% of the growth in non-group coverage in Massachusetts. Healthcare reform in the state is a shared responsibility. One-third of some 440,000 newly insured residents in the Commonwealth are in employer-sponsored plans, one-third in employer-sponsored plans. Near universal coverage is the product of shared responsibility among employers, taxpayers, and those directly involved in providing and reimbursing care. Our governor and our legislative leaders are committed to maintaining coverage and sustaining access. Now, let me just say a couple things about the two Connector programs that I briefly described. The Connector organizes a market to provide meaningful choice. Like any retailer, we ask our customers what they want. What they tell us is they want quality, meaning insurance options they can trust. They want value, meaning that we compare and showcase those plans which offer the best benefits for prices charged, and they want to be able to compare and shop online as opposed to calling each carrier, asking a bunch of questions, being put on hold, and then trying to compare notes at the end of the day. In both Commonwealth Care and Choice, we set standards for covered benefits. We rigorously evaluate the products before offering them, and we organize the choice of plans so that members can readily compare them. At enrollment and afterwards, we work with members and health plans to resolve member issues. With Commonwealth Care, since we are spending public monies for coverage, the Connector specifies a set of benefits and conducts a highly competitive bidding process. But enrollees choose the plan. They choose the provider network. And if they choose a more expensive plan and they earn above 100% of FPL, they pay the additional costs. With Commonwealth Choice, which is the unsubsidized plan, our members are making a major buying decision. They're spending somewhere between $1,500 and $15,000 a year on insurance, depending on family size, age, zip code, et cetera, and the plan they choose. The Connector sets 4 very different levels of benefits from which customers can choose and offers at least 6 different carriers on each of these benefit tiers. Our customers can shop by entering 3 pieces of information: age, household size, and zip code. We do offer customer telephone service, but 80% of the buying is online, typically in 20 to 30 minutes, to spend somewhere between $1,500 and $15,000 a year. And whichever plan they buy, enrollment is guaranteed, as is the next year's renewal, regardless of any change in members' medical condition. And believe it or not, after spending all that money, our members consistently thank us, even though we all know this is outrageously expensive. Frankly, this is, and I've been in the insurance business for over 30 years, the most consumer-friendly, consumer-driven offering that I've encountered. Thank you for your time and interest, and I'll be happy to do my best to answer questions.
Thank you. Ms. Politz. with 2 L's, not 3.
Like Mr. Pallone. Thank you, Mr. Chairman, members of the subcommittee. Health reform presents you with an opportunity to provide for more organized health insurance markets. Through a connector, as Dr. Kingsdale discussed, or an exchange, you can organize markets around explicit outcomes that you want to achieve from health insurance. I would like to briefly review 5 key goals. The first is to promote risk spreading and stability in health insurance. We've already talked today about how a small minority of people accounts for most healthcare spending, and this creates an overwhelming financial incentive for insurance companies to avoid risk. So we need rules to make that stop. I've testified before about medical underwriting practices that make it harder for consumers to get coverage, but other marketing practices make it difficult for consumers to keep affordable coverage. Age rating raises your premium steadily, and when you reach your 50s and 60s, when the incidence of most health conditions starts to increase, health insurance becomes very unaffordable. Carriers also use durational ratings to actually apply a surcharge to premiums based on how long you've held your policy. The idea is to encourage people who can still pass underwriting to not renew, but to go out and buy a new policy, go through underwriting again to get the good rate. But the people who can't do that get stranded in policies and see their premiums spiral. Health reform can help by changing the rules of health insurance marketplaces, require guarantee issue, community rating, no pre-act, so that we stop competition on the basis of risk avoidance. The second goal must be to assure adequate coverage. Today, we have 57 million Americans struggling with medical debt, and 3/4 of them are insured. Some are underinsured because their policy doesn't cover key benefits, but increasingly the problem lies with high deductibles and high cost sharing. We've accepted higher cost sharing year after year in an effort to try to hold premiums down, but as soon as we get sick, we realized what a failed strategy this is. Especially for patients with chronic conditions, high deductibles hit relentlessly year after year. Even modest copays will mount quickly, and as a result, people have difficulty affording basic care management for chronic conditions like asthma and diabetes, and as a result, avoidable and expensive medical complications arise. In short, underinsurance is becoming a threat to the public health. It also drives up bad debt and collections costs for doctors and hospitals. The industry experts tell us that the collections rate for low deductible plans is about 87%, but for high deductible plans is only 43%. So it adds to that administrative cost and hassle for providers as well. Reform can help by setting comprehensive standards for what health insurance covers and make sure that in the marketplace only good choices are available. A third choice is to assure affordability. In the interest of time, I won't belabor this point. I think the other panel talked very convincingly about the need for subsidies for both premiums and for cost sharing to make health care and health coverage affordable. The fourth goal is cost containment. Most private health insurance markets today are dominated by a few large carriers, and yet these dominant carriers have not used their market clout to control costs. Instead, they've passed on health care costs to consumers while increasing profitability at the same time. Reform can help by organizing health insurance markets to generate new forms of competition and more effective cost containment strategies. You have a number of options to consider. As is the case in Massachusetts, the exchange can have the option of not including all carriers as participants, but instead selecting those that are the most effective and the most efficient. As also was discussed earlier at great length, a public health insurance plan option can and should be offered to heighten competition. Finally, Mr. Chairman, transparency and accountability are critical to a well-functioning health insurance market. Mr. Deal spoke earlier this morning about price transparency and the importance of that, and I completely agree, but we need transparency throughout our health insurance system and markets. Health insurance policies themselves need to be transparent and understandable. Policies are so complex today, they leave most consumers confused and frustrated. A recent industry survey found that most people would prefer to do anything, including working on their taxes, rather than trying to read through their insurance policy to figure out what it covers. And we need transparency of market behavior as well. Too many market practices are hidden from view. It's very difficult to track who's enrolled, who's disenrolling, when claims are paid, when they're pended, when they're denied. These questions are important and they are answerable if only we will insist on the data. In an organized insurance market, we can do that. In the past few months, as financial markets and the economy have struggled, how many times have you heard or you yourselves made the call for greater transparency and accountability? These themes must also apply to health insurance and guide your efforts on health care reform. Thank you.
Thank you. Dr. Baker.
Thank you very much for the opportunity to be here. I'd like to draw a couple of key distinctions at the beginning. First, health is very different from health care. And second, health care is very different from health insurance. I know we've all hit on these points already, so I'll be brief. But we know many things affect health outcomes besides the health care system. By the time someone shows up at the hospital in critical condition, it's already too late in some senses. That means that comprehensive reform should address investment in all sorts of things that promote health, including health behaviors, access to nutritious foods, exercise, etc. It also makes international comparisons of health systems particularly difficult, because when we look at the value our healthcare system is producing, the health outcomes are the product not just of that healthcare system, but of all those other factors that may be different across countries as well. The second distinction I wanted to draw was between health care and health insurance. And that sounds obvious, but it's often conflated in the debate. And this goes to the point that Representative Christensen raised earlier about what our responsibility and what our goals should be for helping sick people who are uninsured. People need health insurance because health care is uncertain, because the risks are uncertain, not because health care is expensive. There are lots of things that are expensive that we might want to redistribute resources for to low-income people, but not through the form of insurance, because those expenses aren't so variable, so unknown. Whereas health insurance exists to protect people against the risk of needing a lot of resources to pay for an expensive health care condition when those resources could save their life. So what do uninsured sick people need? They need health care, but they don't necessarily need health insurance. And we might want to design a reform to help those people that gets them access to care that doesn't necessarily build on an insurance system designed to help the majority of people who get insured when they're healthy, some of whom then fall sick and some of whom don't. The problem of the sick people who, the problem that sick people who are insured have is one of ensuring the affordability of that care going forward. People want protection not just against high expenses today, but against the risk of high expenses next year. And that means having an insurance policy that you can count on if you or a family member gets sick. Your premiums shouldn't go up, you shouldn't lose your insurance. You've done what you needed to do to get insurance when you were healthy. We need to ensure that that insurance stays around to protect people should they fall ill. A second principle I'd like to bring up is the idea that covering the uninsured doesn't pay for itself. It would be wonderful if we could recoup the investment that we make in covering the uninsured through less spending on emergency departments and inefficient care that we know the insured consume differently from the uninsured right now. Unfortunately, I don't think we can count on saving money by covering the uninsured, but that doesn't mean that it wouldn't be money extremely well spent. If we invest money in covering the uninsured, they'll gain enormous health benefits from it. So the money is worthwhile, but it's not free and it doesn't save money on net to extend insurance coverage because we know the uninsured are consuming too little health care today. So extending coverage to them would give them access to more care that would cost more money. So we need to design reforms that can pay for that. A corollary to that idea is that preventive care doesn't pay for itself by and large either. There are a few exceptions. Flu shots for toddlers more than pay for themselves. Most preventive care, again, is a good investment in health. It promotes health in the long run and it's worth spending money on, but it doesn't reduce costs. Most preventive care buys quality-adjusted life years at a pretty good price, and we should invest in that. Some preventive care is very expensive for the health that we buy and is in fact less cost-effective than care that wouldn't be characterized as preventive. So we shouldn't think of preventive care as a uniform cure-all either. It's a mix of highly cost-effective and highly non-cost-effective care as well. Another principle that I'd like to bring to the debate is that insurance alone doesn't guarantee access to high-quality care. We hit on that, the questions discussed that a fair amount in the first panel, so I won't spend a lot of time on it here, but there's ample evidence, largely derived from the Dartmouth data on variations in healthcare within Medicare, that high spending on health doesn't guarantee high-quality care, and even people in the same insurance program, Medicare fee-for-service, get wildly different healthcare benefits in different parts of the country. Next, I'd like to raise the idea that employees bear the burden of employer-provided health insurance. This means that if we want to foster the employer system, if we want to put employer-based policies on a level playing field with non-group markets, the reasons to think about doing that involve risk pooling and economies of scale in large purchasing, not the idea that employers somehow bear the burden of health costs through profits. In the long run, when healthcare costs go up for employer-provided plans, employees bear that cost in the form of lower wages. That's part of the reason we've seen slower wage growth over the last decade. It's because an increasing share of compensation that workers get has come in the form of health insurance rather than wages. In some cases, when wages can't accommodate that increase in healthcare costs, that results in unemployment. So ultimately, workers bear the burden either through lower wages or in some cases through losing their jobs. The last point that I'd like to make is that high-deductible health plans can introduce cost sharing that promotes efficiency, but they aren't the magic bullet. There's no reason to think that the high-deductible health policies that we see today are the perfect structure. What I think the tax system should aim to do is promote innovative insurance coverage that fosters high-value care. That might mean higher deductibles for some kinds of care and subsidizing other kinds of care. Maybe we should pay people to go get flu shots because those are particularly cost-effective. It should have a negative copayment associated with it. Any reform design should promote that kind of high-value insurance structure that I think is unlikely to be generated by a monolithic single public payer plan, but is unlikely to be generated by a prescribed particular form of deductible. So in conclusion, I think we should address the issues of coverage and cost together, not because they're equally important necessarily, although I think both are very important, but because each goal is more likely achieved when the two are considered together. It's very difficult to design a system to cover the uninsured that we can afford tomorrow if we don't take healthcare costs into account. And if we don't get costs under control, more people will find themselves falling into that uninsured bucket as their employer-provided plan or the non-group market plans become less and less affordable.
Thank you, Doctor. Mr. Heiselmeyer.
Thank you, Mr. Chairman, and members of the committee for inviting me here today to testify. I have submitted prepared remarks, which I will summarize briefly. Let me just make a couple of points, and I'd particularly like to follow on what Dr. Baker just said about silver bullets. In 20 years of doing healthcare policy, it has been my observation that too often, too many of us, regardless of where we are on the political spectrum, are tempted to try to latch on to something as a small silver bullet solution to healthcare. I have come to the conclusion that while each and every one of those things has some value, none of them are a magic silver bullet to fix the problem. Rather, you have to take them in a context, and you have to look at them as pieces of the puzzle. We also have a tendency to run towards fads. That is the silver bullet, if you will, that is most popular at the given moment. Again, this can be on either side of the aisle. We've seen it with HMOs, HSAs, public plans, this, that, and the other. Again, I would encourage you to refrain from that. In looking at the situation we have today, what strikes me, not only based on my experience over 20 years, but actually based on the last 5 years of working with about 18 different states, literally I was in the period of 7 days testifying in Anchorage and Tallahassee, so it's across the country in very different circumstances, how diverse the situation is on the ground in your different states, and also how much more amenable it is to solution at the state level. I've also, on a policy level, been intrigued by the few things that are really needed, in my view, to make measurable progress. And let me summarize them as I do in my testimony. I think the Massachusetts Connector, which is the first example, and now Utah, unfortunately, Representative Matheson isn't here, last week enacted something very similar, is the first couple of examples of what I think needs to be done in one area, which is to create an individualized solution for employers and their workers. This is not the same as the traditional individual insurance market. As Mr. Kingsdale points out, this functions just like the employer market. You are guaranteed the coverage. You have a right to pick it at open season. In fact, it works like FEHBP, which was discussed earlier. In fact, they are doing the things you would have to do if you were to say, we're going to take FEHBP, and instead of having it be one employer, the federal government, we're going to have a state do it for any employer in the state to participate in. That is what the unsubsidized Commonwealth connector reforms that they are rolling out right now are designed to do, and what other states are looking at doing. Any state can do that today. And we've shown them how they can do it, working as Massachusetts and now Utah are doing within federal law. Point two is, if you want to apply guaranteed issue to the individual market, that can be done. It can be done at the state level. Some states have done it, as Ms. Kaufman pointed out. It could be required at the federal level. The important thing is to do it right. It should not be an unlimited, pick it up, drop it anytime you want kind of guaranteed issue, but rather, as the federal government set forth in HIPAA, a set of standards for guaranteed issue in the group market for individuals when it is reasonable for people to do that. The other 2 points are in my testimony are that the way to make those reforms work in an optimal fashion is to support them with risk adjustment mechanisms. And I've noted in my testimony that in my discussions with folks in Massachusetts and in my observations, I think if I was to go back and say, what did they leave out that they should have included, and that was they didn't include a risk adjustment mechanism for making sure that nobody was disadvantaged by getting, as an insurer, getting more of the sick cases than somebody else. Interestingly enough, learning from that lesson, that is the first order of business in the Utah reforms, is to set that piece of it up. And then finally, if you are going to move to guaranteed issue in the individual market and you are going to give people the right to buy coverage, then for that to work economically and socially, people have to take the obligation to take advantage of that right when they are healthy and pay into the system, and not simply avoid it until they need it and then want to take out of the system. Finally, what strikes me about all of this is that any of this stuff and all of this stuff can be done by states now. It is not necessary for the federal government to do it for them. The federal government, however, could do things to aid and encourage them, and I'll be happy to discuss that later. And then finally, to Representative Deal's question, again, I think price and transparency is essential to making this work even better down the road. But again, I think this is something, given that states regulate insurance and the practice of medicine, that states are looking at doing themselves to one degree or another, and is certainly something I would encourage there to support it. Thank you.